What's up guys, Philip at Trade Genius. In this video I wanted to discuss the Bitcoin golden cross, explain what that is. Some of you might know what it is, but for those of you that don't, we'll discuss what that is and what are the real ramifications for when that happens. I've seen a lot of talk about it's coming up soon, and so we're going to talk about how that's played out in the past and what we can expect going forward. So all right, let's dive into this video and check that out.
Trade Genius.
Guys, real briefly, if you guys sign up for our specials this week, we're going to do a private webinar for you guys. So if you're already a member, if you're going to be signing up, private members only webinar next week, Thursday. It'll be me and Bob, and we'll go over some stuff. There's a lot of things happening in the markets that are going to affect stocks, bonds, cryptos even. And so we wanted to go over those things with you guys and make you alert as to what, the potential cracks in the dams. Well, not potential, they are cracks in the dams, and how that can play out over the coming months. So check that out. We have our training and our room specials, and that includes all of our services. So check that out, guys. All right, so the golden cross. Essentially what the golden cross is when the 50 period moving average, and this is looked at on a daily time frame. You can look at it on other time frames, but the golden cross, I think that everybody kind of clues in on, is the daily. It's the 50 moving average and the 200-day moving average. So if the 50 crosses down over it, that's really bearish, and if it crosses above it, it's really bullish. So here's the logarithmic chart. So it's not your usual linear chart. Logarithmic chart scales it so you can see the entire move in context. So we're going to look at these periods where that's happened, and how you would play that, so, and what that means long term. So let me fire up my pointer here and let's get into it. Okay, so guys, over here we had, and this is really early September 2011, back end of 2011 was just kind of a bear market like we have now, and we had a bearish cross. So if we zoom in on that time frame, so we get a bearish cross, and one thing about bearish crosses you guys have to keep in mind is there's somewhat of a lagging indicator. So it crosses here, but you've already had a large decline up into that point. So a lot of times what will happen is you get a cross below the 50 moving average. Okay, this is just a pretty naked chart, just those two moving averages, but a lot of times you're going to see this bounce on the 200-day. Now this is back when things were a little simpler, and I think the markets were less complex. So you got some really nice reactions off your typical moving averages. It's a little more complicated these days, and I think that'll continue to be the case going forward. But you got to bounce off the 200-day, hits its head on the 50, comes back down. When you're testing the 200-day like this, that's bearish, and then you get a break below. That's even more bearish. So basically, the golden cross is kind of a confirming thing, right? At that point, you're kind of then looking for, you're in bear mode and you're looking for shorts and stuff. And we actually have a bear course, crypto bear market course. A lot of people aren't used to that. So we have a course that put together what to look for, how to play those, and how to, instruments that you can use to your advantage on that. So you can check that out. But so that's a bearish cross there on the downside. It's a bearish daily cross. So now, moving forward, you have a bullish cross comes back up. So this one was again, coming out of a bear market, very muted volatility, kind of going sideways, but you did get a cross. Now, when you zoom back out on that cross up, so everybody licks their chops on the bullish crosses. But as you can see, and this is why people key in on them, is because when that happened back in early 2012, I mean, just an immense run up, right, until your next bearish cross. So you had essentially from this area here where price crossed up over it, and you basically actually had a dip back down, but the moving averages never really crossed back down. So from that moving average cross up here was all the way up to $1,000. So you're going from just dollars to huge. So you're looking at 19,600% increase, right? Obviously we're in higher dollar values now, so those percentage increases won't be the same, but that's where people get really excited. Now, if you notice going forward, what happens, we have another bearish cross, and price kind of hugs the 200-day and then starts to go down. Now, the thing with these is that, and it actually does cross back up. So here's the thing, right? Not all crosses really work and are going to signify a higher or a series of higher highs that ends up in another, bull market. So this one crossed down, hugs up here, hugs up here. Notice though, we don't really make any higher highs, and that's kind of the situation that we're in now. So, when even though it crossed here, just because it crossed, I wouldn't be going all in, and that's the key. You want to see price confirming by making, changing the market structure. If it can't make higher highs here, this is on a daily chart, then the propensity or the chances for this to roll back over on a bearish cross are higher. And that's what ended up happening. And so then you're kind of, again, back into bear mode, looking for opportunities to short versus going to counter trend, going long. So that continues on, and then we get, here's another spot. Now this is a great example because it's a little tricky, right? You have a bullish cross, then it goes bearish, and then it goes bullish. Typically when I see that go from a bull to a bear to a bull cross, that is a very bullish scenario. And vice versa, if it was bull bear or bear bull bear, that would be very bearish. So whenever you get those, it's kind of a lot of times you'll see that at the end of a consolidation period, and that happens, it's fractally, so it happens on all different time frames. You can see those scenarios. We see it on our swing indicator sometimes where it happens like that, and those create really good moves. So you just want to look at, when you get into these situations where it's like, okay, I got a cross, what you want to see at that point is you kind of want to let that cross, you want to let price confirm that cross. So if it can't hold above that 50-day moving average when you pull back to it, probably not a very bullish thing. I would, price has yet to really confirm things. Now in this situation, it's created a series of higher lows, but notice this bar here comes down, right? And that kind of nullifies this whole thing. So, and then you're back below the 200-day moving average. So keys are staying above the 200-day moving average and staying above the 50-day moving average to really confirm that, yeah, this could be a potentially one of those huge percentage gainer long-term bullish crosses. And those are the ones that you want to be in on, right? Especially if you're positioning for long-term hodling. So that's why, it's a very, for a lot of people, a very key indicator to use. So this one goes ahead. Now notice on this last one, it moves up actually here off of this level. So this is back in September 2015. Big move up. That's what you want to see. You want to see volume. I know it's hard to see here, but that was good volume. Pulls back to the 50-day moving average and holds that. So at that point now, this is looking like a sustainable change in the trend on the macro trend, and now we're going to go higher, and it continues to go higher. So on this particular bullish cross where we had, basically price confirming that there was a bullish run. I mean, this is another one where it takes us to, really high highs. So if we go from this area here, now when this crossed here, we'll go up where the price was, right? That bullish cross, and that peaked out at another 5,800% increase at the very top. So again, you're looking at very, very, very high percentage gains off of these crosses. But again, you want to let price confirm that that is in fact a cross that has legs. So here we are. We are at another point in time where potentially we'll see another bullish cross. And this is probably going to happen out of a breakout of this consolidation area. So our model shows us that we're probably going to chop with maybe a little bit of a bias up bias until about mid-November, and then a move up. So that's where we're kind of looking to see if we actually see a bullish golden cross here. And so anyway, that's pretty much it on this video, guys. I just wanted to kind of explain those crosses. They're not magical in that if it happens, you're going to have another automatic 5,000% gain. They can be a little tricky, as you saw. You really want price action to confirm that. Again, if you want to rewatch this and go over that action with price and the moving averages, go ahead and do that. But that's really the way to do it. It's more of a confirming indicator on price, or potential confirming indicator, but you really want to see price structure change and see a major higher high and higher low. So anyway, I hope that helps, guys. Thanks a lot for watching. Appreciate it. As always, join us in the room. We also have a free course on the site. Check that out. Please hit like and subscribe. And if you're on mobile, ring that bell. All right, guys, I will see you on tomorrow's video. Take care. Bye.
trade genius.